we're always benefited by a full commission. More things will get done in the right way. This environment isn't really optimal. You do want a full complement of commissioners. You want a good process. I mean, yes, people can still keep self-certifying things, but that's not the way you want everything to work. I'd love to see this come to fruition. I'd like to see the new nominee get appointed and get put in place, and hopefully see the other chairs get filled as well.
What have been your observations about Cboe's current market position?
We have great people, we have great products, we have tremendous growth. I mean, I think we've just been so fortunate over the last 5 or 6 years. We're definitely operating from a position of strength, but I would say the biggest observation coming in is that we were trying to do too many things all over the world. You know, most of the things we do, John, are not capital intensive. They're human capital intensive. And so we really needed to kind of think about, are we in the right places, pursuing the right things? What is the opportunity cost of the choices that had been made? And how do we reorient people so that we're actually going where we best belong, where we can really make a difference and be successful, that plays to our core strengths as an organization, and where the win is big enough that it'll matter because we're a public company and we have to generate growth.
Where do you see the growth opportunities?
I want to be clear that, I think Cboe did achieve success in, say, for example, Canada and Australia. In some of those places we have like 20% market share in secondary trading of equity securities. Given what it takes to run an exchange for us, it's not an area where we're going to make a lot of money. But part of the mistake that we had made was we were trying to do things like corporate listings, for example. Well, that's hard. I mean, corporate listings have been in secular decline for a couple of decades now. Getting corporate issuers to switch listings from, say, the Australian Stock Exchange, those things can be difficult too. Where we're trying to pivot to is where there's much more demonstrable, kind of larger markets, but also explosive growth. So digital, crypto, event and prediction. We won't do everything in event and prediction. We'll tailor that to things that are more economic and financial type contracts. But there's growth there. Futures plays to our strength as a product innovation company. So that's what we're pivoting to.
What are the key changes that you've made to the executive structure?
I'm proud of the fact that we have a great blend of veteran people as well as kind of new people coming into the organization. We've also had somebody who had been at Cboe, Rob Hocking, who's come back to Cboe. The big thing I would say is that, the structure and what I'm trying to do is, first of all, to achieve a greater level of maturity as a public company. So just as an example, Cboe didn't have an enterprise strategy and corporate business development function. And now Prashant Bhatia leads that function for us. In some cases, we had too many people reporting directly to the CEO. My goal is to bring the right people in and get the right structure so that I have leverage and they all have leverage. If I have to have 15 or 17 direct reports, I'm not going to get a lot done. And then the other thing that I would say is critical for us is we as a team make all our decisions together. This is not Craig Donohue as CEO dictating all the decisions. We literally make our decisions together. We have a meeting every week. Everybody comes well prepared. We have a very thoughtful agenda, very thoughtful materials, and everybody gets an equal vote. And that's because I want everybody to think about being an owner. I want them to think about what will this company be like 20 years from now. There are times when a decision might take us longer, and I know exactly what we should do, and I know what we're likely to do, and I could get there faster if I just imposed my will. I don't do that anymore because I'd rather people learn how to get there. It's that old saying of you can either feed people fish or you can teach them how to fish. At this stage of my life, my psychic gratification comes from teaching people how to fish and then watching them be successful with that. And I really mean that. I mean, that's what drives me. I mean, that's what makes me excited to come to work every day.
Where do you see the next growth opportunities within the derivatives markets?
For the moment, we're trying to increase our focus on event and prediction markets and then digital and crypto markets. On event and prediction markets will be different than most of what you're seeing in that evolving marketplace. Focus on most of it being organic, meaning we'll develop our products, we'll list them, we'll clear them. We won't be getting involved in sports. We're going to limit ourselves to contracts that are based on, economic indicators, financial instruments, because that's really more who we are. I want to develop a client base there that's more sustainable, them to be educated. I want them to have access to content that makes their decision making more intelligent than it otherwise might be. And I want them to be sustainably successful so that if they would like to move up the food chain into, ETF products or into equity options, multi-list, or into SPX or zero DTE, they feel like they have the building blocks to do that. On the digital and crypto side, that's an area where I think for a while we were an early leader in that space, but then with the demise of FTX, we sort of pulled back too far. And now with the increased legislative and regulatory clarity and the continued growth in those markets, I still think it's very early stages. I think there's a lot that we can do. We still have a rapidly growing business in FX. That's been a little bit of an orphan inside of Cboe Global Markets. My job is to show it a lot of love and try to help nurture us toward even greater growth there. So those are all areas that are a focus for us, but we've got a lot of people don't even know that. We've got a really nice market-leading FX trading platform, and I see great potential there. So those are some of the things we're going to try to do.
How does prediction markets revenue contribute to your long-term growth strategy?
I think about what Cboe has done in terms of product innovation with the introduction of zero DTE options based on the S&P 500, what we call SPX and mini XSP. In a way, it's kind of like an event contract, right? It's a daily expiration, usually traded as a spread trade in a capped risk format. And they've been wildly successful. It's probably one of the most successful new products introduced in the industry in 3 decades, from quarterly contracts to monthly to weekly, now daily. And now we've got these new upstart event and prediction contracts where it's totally event-based. Could be an hour, could be several hours, could be a daily contract. They're converging. They're coming together. So I think more than any other traditional exchange, we have the bona fides in terms of what we've been doing to make that successful. In terms of impact financially and revenue-wise, I mean, it's easily a $500 million a year revenue pie today. It's growing exponentially, so it's going to be multiples of that in the next number of years. Our job is to pick where we fit. And where we think we fit is in economic and financial contracts where people can express an intelligent point of view. I'm not dismissive or derisive at all about the rest of the event and prediction market space. I can see net welfare benefits to what they're trying to do, but I don't think it'll be within the Cboe strategy or the Cboe brand that we will get people who are trading event and prediction contracts based on economic and financial indicators, either to create wealth or to manage risks that they might have, and we'll get them to move seamlessly into our ecosystem of options products.
Why are you staying away from sport event contracts?
Over time, it's more likely to be a direct-to-client type of interface. I prefer the intermediated model. I just don't see the nexus between people who want to express an opinion on a sports event of any kind and trading zero DTE SPX options, trading multi-list options, trading other derivative products. I'm not going to say there's no customer connectivity there, but I don't think it's really in the sweet spot of what we're good at. And I'd rather we stick to what we're really good at, number one, Number two is, I want people who can be sustainably successful in the market. And three, we have a brand and a reputation to protect that we've earned dearly over the last 50 years. We go through these fits and starts in the industry, and things that are really exciting and sexy at the moment can blow up 5 years from now, and that's not where I want us to be.
What role does Chicago play in Cboe's future?
I feel passionate about Chicago and passionate about Chicago as the global epicenter of exchange-traded derivatives. Chicago for 50 years has been the foundation for product innovation and market development, whether it was the Board of Trade, whether it was the creation of options in 1974, Treasury bond futures, Eurodollar interest rate futures, stock index futures. We have so much to be proud of as an industry, but what I love about being in Chicago is the intellectual capital. I see people all the time who've been along for much of that whole journey. Chicago's been very good to us, and we're going to be very good to Chicago.